Hello all, welcome to this quick video about trying to explain the yen weakness in 2022. So the dollar has been very strong this year so far against all the currencies. So there are a lot of explanations and for FX more particularly, there are several factors that are explaining always the FX moves. As we're going to see in this video, there is particularly one that is explaining the yen weakness. So let's jump immediately to the next slide, looking at how the Japanese yen has been doing versus the US dollar for the year. So as you can see here, the trend is pretty clear. We started the year around 115 US dollar versus Japanese yen, and now we are close to 145. So a big move. If we move into this slide, looking at all the currencies, so we start from the top. So the Japanese yen has been weakening versus the US dollar by 25%. The British pound by 17%, DXY and US dollar around 13%. You need to keep in mind that the DXY is 55 to 60% made of euro. So when you play the DXY, you are mostly playing the euro. Then we get the renminbi that weakened by 9%, the Swissy by 6%, and the Canadian dollar by 3%. So as we can see from that slide, really in red, the Japanese yen has been the weakest of all the major currencies versus the US dollar. So one of the reasons that has been pretty clear, so here we are looking at the chart in white, we are looking at the US 10 years, so the US Treasury, how much 10 years are yielding in the US, which are around 3.25%, whereas in Japan, we are still at 25 bips. So we look here at a one-year chart. And as you can see in this chart, in the US, we went from 1.5% to 3.25%, which is 175 bips, whereas in Japan, we barely moved. So if we look at the same chart now, if we look at both the US dollar yen, the dollar yen, in orange, so that would be from the left-hand side, axis, and if you look on the right-hand axis, that will be the US 10 years versus minus the Japanese 10 year. So that will be the US Treasury versus the JGBs. As you can see, there is a massive correlation. So looking at yields, what the Bank of Japan has been saying for now quite a long time is because the inflation, which is here in white, which is the year-on-year CPI in Japan is around 2.6%. As there was no inflation, there was no reason for the Bank of Japan to raise interest rates. So that was very true until 12 months ago. But now, as we know, all over the world, there is a lot of inflation. Even if the Japanese CPI is way below the CPIs year-on-year that we can see in Europe or in the US, we are still at much higher level than before. And it's getting harder and harder for the Bank of Japan to justify yields that are close to 0.25% if you want to be more exact. So looking forward, what is important to be looking at is so far the Japanese yen has been one-way traffic. So the CTAs, which are the momentum funds, have been pretty much
Translation.
short.
OI expects to reach 100% renewable energy matrix by 2025.
40 or 50% of their NAV were short the Japanese yen. If you look at the commitment of traders that came out every Friday, there is not extreme position for the Japanese yen as a short. So far, the Bank of Japan Governor Kuroda has been under pressure, but his views have been that it's not his job to check the FX and to control the FX, and that is more the job of the finance ministry. And what has been interesting over the last couple of weeks, we have seen more and more headlines from politicians in Japan to try to control this weakness of the Japanese yen. So when we look at currencies, it's both an FX trade. When you look at an FX trade, it's both relative and absolute. Relative because you need to be looking at one currency versus the other. In that case, that is the US dollar versus the Japanese yen. And as well, this is an absolute case because you need to be looking at both the strengths of the US dollar and the Japanese economy. So recently, what has been happening, so if we look at the recent move from 140 to 145 that we had over the last week, is the markets, the financials market have been pricing more and more an hawkish Fed coming into the FOMC meeting that is happening in 2 weeks, with a terminal rate, meaning a peak rate from the Fed fund rates, a bit higher to 25 to 50 bips than it was a month ago. So in the meantime, the market has not been pricing any change from the Bank of Japan. So as long as we do have this hawkish Fed and this Bank of Japan not doing much, the trend is going to carry on. You can have some talks, you can have some even FX intervention, but the trend is so strong that really it's going to be hard to see how we can change this move. So as I said before, there is mounting political pressure in Japan to at least to contain this move. And as traders, we need to be looking at the next catalyst. And what are they? Obviously, this is a fight. It's a fight between the Fed and the Bank of Japan. So the next catalysts are pretty obvious. On the 21st of September, which is on Wednesday, in 2 weeks' time, we're going to have the FOMC meeting. And then on the day after, we get the Bank of Japan meeting. So it feels like so far nothing is expected to change on the Bank of Japan, from the Bank of Japan. I'm pretty convinced that on Wednesday on the FOMC meeting, there will be questions asked to Fed Powell about FX and the moves of the US dollar, because it starts to be making the US economy and some US companies suffering, because when the US dollar is too strong, that makes the exports much more expensive. So we do have this catalyst. There is an absolute positioning in terms of CTAs. So those CTAs might have to reduce exposure. Even if they go from 40, 50 to 30, that's going to have an impact. In the longer term, the only real catalyst that we might have is a change of the management. That's the same with the company. And when I say change of a management, that would be the change of at the Bank of Japan, and that's not to be expected before the end of before April 2023. So that is all for this quick video on FX. I hope it helps. Really looking at FX, there are always several drivers, but what is very true for the driver for the US dollar versus the Japanese yen, that has been a big part due to the differential in yields between the US and in Japan, and more importantly by the fact that the market is pricing for the Fed to be more hawkish and the Bank of Japan to stay on standstill. So if it helps, that's a good thing. If you get comments, and don't forget to subscribe to the channel.
Translation: Follow the peaceful demonstration brings relief, but economy worries businessmen.